Good afternoon. It's 3 o'clock. 3 o'clock today here on Tuesday, the 29th of June. Good afternoon. Welcome to the joint Gaming in Holland and Gaming in Germany webinar, publicly listed operators in the German and Dutch online gambling markets. My name is Willem van Oort. The re-regulated German and Dutch online gambling markets will open on July 1st and October 1st, respectively. Several publicly listed online gambling operators have already announced their interest in entering these markets. In today's webinar, we'll discuss what operators have said about these markets, how important these markets are likely to be, and how operators can be successful in these markets. Before we kick off today's webinar, I would like to thank our strategic partners and sponsors. As this webinar focuses both on the German and Dutch gambling market, it is only fitting to thank both our Gaming in Holland and Gaming in Germany partners and sponsors. Thank you very much. We would not be able to do this without your invaluable support. As always, our webinars are interactive. If you'd like our speakers to answer one or more of your questions, please submit them through the Slido app. I'm sure you've seen them at some of the other webinars. At the end of this webinar, there will be time to answer audience questions to our expert speakers of today. Again, if you'd like to submit a question, scan the QR code that you see on the screen or visit slido.com and enter the event code GIH. Next, select the Q&A tab on the top of your screen, like you see in the image here in front of you, and submit your questions. With us today, we have two experienced watchers. We have Scott Longley. Scott is editorial consultant at Clear Concise Media and co-author of the Earnings and More newsletter. And we have Gavin Kelleher, gambling sector analyst at Goodbody Stockbrokers. Welcome, Scott. Welcome, Gavin. Great to have you here today. How are you?
Very well, thank you.
Excellent, thanks.
Welcome, welcome. And again, really pleased to do this so timely before the opening of the German market on the 1st of July, in 2 days from now. Let's start by looking at the regulatory environment. Scott, question to you. What are the main regulatory burdens that operators in the future licensed German and Dutch markets must contend with? Scott.
Yeah, so as you mentioned, Willem, we've, as part of the Earnings and More newsletter, we've been following what's been said in the first quarter from various listed companies particularly about the German market, to some extent, some commentary around the Dutch market in terms of where operators stand currently and what they're expecting from this point onwards. Obviously, we've had a standstill period in terms of the German markets ever since January, when effectively the rules were being adhered to, even if they hadn't yet come into total force. And from some of the leading operators, some of the leading listed companies, we've already seen some commentary on what effect that has had on their revenues in the country, or their GGR. The leading one, of course, is Entain, with its BetWin brand and Casino Club. And their CFO on the earnings call, Rob Wood, confirmed suggestions from the analysts that ballpark the figures were down by circa 45% in Germany in the first quarter. And although Wood didn't directly say that everybody else is suffering the same, he said that the ballpark everybody else would be suffering somewhat similar declines. Certainly, what we heard from Flutter, which has a reasonable position in Germany, it said that the imposition of the Interstate Gambling Treaty this summer would have a significant impact on profitability within the German operation, would cost the company around 20 million in EBITDA going forward. In 888 was another company which mentioned Germany, and it said again that its business had declined already by between 40 and 50%. And perhaps the most vociferous comments from any operator with regard to Germany came from Leo Vegas. It said that it certainly said that German revenues had dragged down its total revenues by 10% or more, and it said that problems had continued into the second quarter, Revenue in April for the company was 13% down, but excluding Germany, it achieved growth of 4%, which kind of suggests how important the country is to that company. And the CEO, Gustav Hagman, went public and said that Germany was now a massive black market. At the moment, it's the Wild West there, he said. 70 to 80% of the players have shifted to the black market. Of course, there's a difference here in terms of LeoVegas is much more casino focused rather than compared to some of the others in the country.
Yeah.
One notable exception, for instance, is Bet at Home, much more sports betting based. It generates around 36% of its NGR from Germany. It said it's seen a significant reversal in casino revenues from the country after the introduction of the transitional regime. But it suggested that it hoped that there would be long-term benefits, and I think that probably goes for any brand that has a sports betting position in Germany. They probably see more of a future there than somebody who's much more wedded to online casino.
Yeah, thank you, Scott. Very clear, very interesting. Following on that, the second question, Scott, could you tell us how publicly listed operators and affiliates are currently approaching the regulated German and Dutch markets?
Yes, so this gets down to the issue of what they're going to do from here, and of course, there is rumours of at least some hope that maybe the European Commission might get involved on the tax front regarding the turnover tax, but effectively, companies are now positioning themselves for the regulated market itself, and especially in comparison to Germany, we do have. In the Netherlands, at least, we have some kind of clarity over who's going to be trying to do what, albeit in the instance of the Netherlands, there is something of an issue around some of the major brands, particularly Kindred with the Unibet brand, and also Betsson with its various brands, about how long their standstill agreements will continue beyond the opening date in October, and both are saying that they hope that as and when they're allowed to take money from the Netherlands, that they will be in a prime position to take market share. But the worry for them must be slightly that they will be behind the curve when it comes to the opening of the market. And obviously, we've had news reasonably recently that the Holland Casino has signed up with Playtech, and will obviously be launching from day one, and will be a very strong ex-monopoly operator in that market. We haven't had similar kind of worries around the German market because I guess it's a bit more of a mixture in the German space, and quite between what might be the lottery operators and the free market or the commercial operators. But certainly in the Dutch market, it looks very much like the companies that are set up to take advantage of that company might be hobbled by the delays.
Yeah, thank you, Scott. Quite interesting. We'll follow on to some of these points in a little while. But before we move to our next question, I'd like to remind you at home or in the office that you can still submit questions to our speakers that we will deal with in the end through the Slido app or website. Visit slido.com and enter the event code GIH. Next, select the Q&A tab on the top of the screen and submit your questions. You can also just point your camera to the QR code you see next to Scott, and everything will go automatically. For our next question, we move to our second speaker, Gavin Gallagher. Gavin, thank you for being here. How are you?
Very good, thanks.
Great. Gavin, as a market analyst, could you tell us a bit more about how investors view the relative importance and future profitability of a regulated German and Dutch market?
Thanks. Listen, Germany and Holland are going to be, they've always been core markets from a European perspective for a lot of operators. Scott has already mentioned Kindred and Entain, two of the leading listed gambling companies from a European perspective. Both are important markets for them. So they do, and they have done, taken up a lot of investors' time over the last number of years. Like in the case of Germany, and you guys will vouch for this, and all your audience will know, it feels like we've been talking about German regulation for 10 or 15 years now, and we're finally less than a month away, a few weeks away from that regulation. And I still think there's the same amount of uncertainty, or a lot of uncertainty, around Germany as there has been 10 years ago. And the problem with that is that we just don't know how profitable the German market under its current structure, or it's the structure it'll adopt from the 1st of July, will actually be. And the big unknown is that there's two big unknowns. Number one, how many operators will comply with that, and how big the offshore market will be. That obviously has huge implications for market share, and it's an impossible question to answer now. And the second thing I think people are asking is whether we can see any, in Germany in particular, whether we can see any sort of, or any form of commercially viable market, or a market that's more commercially viable to licensed operators, evolve over the longer term, and how long that could take, and whether lobbying will have any success in the German market. And they're the kind of questions investors are asking. Number one, how profitable the market can be from the start. And number two, in the case of Germany, will it get any better over the next couple of years? And nobody has the answer to that. But if we look at the example of France, which regulated back in 2010, we've had a lot of talk about tax rates improving in France and more products being allowed, but nothing has happened. So I think investors have been burnt slightly in the past with regulation of European markets. And while people see, in the case of Germany, the unviability of the market long term, we've got examples where countries haven't adopted or haven't changed regulation to be more favorable to the licensed market. So I think with the German market, investors are taking a wait and see approach. They like the certainty that regulation brings, but they just have question marks over how in the long term, how viable that market can be. So those questions remain with Germany. I think with Holland, there's less uncertainty, and you can definitely see in Holland, yes, it's a high tax rate, but as Scott mentioned, you can see operators, yes, they may not get allowed into the market from when it launches first thing, but you can definitely see a much more viable market evolve in Holland over the next couple of years in the Dutch market. And I think people would have much more certainty over that market. And as well, Scott mentioned Playtech, who have signed a deal with Holland Casinos. You could definitely see them being a winner, just given the brand recognition that Holland Casinos has and the product expertise that Playtech brings with it. So I think the likes of Playtech, Holland Casinos, and Kindred, I think they're going to be winners long term in that market. So if it was to summarize what investors think, I think Germany, it's still a wait and see, a lot of uncertainty. Holland, not the most favorable regime, but a bit more certainty around it.
Great. Very clear, Gavin. Thank you for that. For our next question, I would like to turn to both of you, both speakers here, Scott and Gavin. Yeah, you're back, Scott. Good. Scott, Gavin, I think we are interested in hearing your thoughts on which structural factors will determine whether an operator is well positioned to benefit from the market re-regulation. Which operators, apart from some of that you mentioned, Gavin, currently meet these conditions, and which ones have some catching up to do? I'd love to hear your thoughts on that. Scott, Gavin?
Yeah, I'll go first on that. I think it's interesting. I think what Gavin kind of hinted at, what he said earlier, is that it's the bigger companies that will be the ones that will be in the best position to potentially deal with the challenges that are faced certainly in the German market. Arguably, you might have a situation where Germany is not exactly profitable for maybe a long time, that kind of the level of investment that would be needed for what wouldn't be necessarily a hugely profitable market means almost necessarily it would be the bigger operators that will be encouraged by that or would stay in the market regardless. And I think the other aspect that's kind of obvious from the German market, certainly from what's been said about the German market, is those that have a sports betting focus, who will be most intent on remaining in the German market and certainly most intent on growing market share when it comes to sports betting. Now, in other markets, obviously sports betting somewhat can be used as a loss leader even for casino operations, and And that's just not going to be possible in Germany by the looks of it. It'd be surprising if it is, but it still means that you can make a decent business in Germany out of sports betting and certainly maintain visibility. Now, the question, as Gavin suggested, the question that investors have is, will things get better as time goes by? So if you establish a position as a sports betting operator in Germany, and then you would hope that maybe the regulatory environment becomes easier as time goes by, maybe the tax rates change. I suppose the problem from that point of view, and it's already been mentioned about France and Portugal, for instance, is that albeit there might be hopes that tax regimes change over time or regulatory regimes change over time, but the evidence is that they don't. And of course, the longer that a market maintains a kind of viability under the circumstances that are installed at the start of a regulatory regime, then the less likely is that they're going to change.
Thank you, Scott. Gavin, anything to add there? Structural factors?
Yeah, no, I totally agree with Scott. Like the way I think about it is that like in any market, any market now, scale is so important. So if an operator has, like you take for example Flutter or Entain, it's tough to say it, but when you've got 3 billion of revenues in the case of Entain and nearly 4.5, 5 billion plus of revenues in terms of Flutter, you're able to wear or you're able to sustain losses or no profitability in a market like Holland or Germany for a very long period of time while the market corrects itself. And you can stay losing 10, 15 million in that market because it's just a small drop in the ocean relative to the rest of your business. So scale is important. So I'd second exactly what Scott said there. And just the other thing about time, and I hate to say it, when you think about Germany, it's taken us 10 or 15 years to get to where we are now. I would be giving very long odds or very big odds on us getting any sort of favourable changes anytime soon, given how long it's taken us to get here. So I hate to be defeatist about it, but I think investors have taken the assumption or made the assumption with Germany in particular that it's going to take a long time for us to get back to any sort of viable market in Germany. And over the last year and a half, fortunately or unfortunately, given what's happening in the US and how much of a premium is being put on US exposure, Germany and Holland are important, but they're not as important from a global perspective as they were probably 5 or 6 years ago when people are looking at listed gambling operators like Flutter, Entain, Kindred, 888, or anybody like that.
Yeah. That's quite an interesting perspective here. Thank you for that, Gavin. Before we question, just a quick reminder again, ask your questions to Scott and Gavin for the end. Use the Slido app, point your camera to the QR code, or go to slido.com, enter the event code GIH, select the Q&A tab and fire away your question. Last question for now to Scott and Gavin. How would you rate the long-term viability of the regulated German and Dutch online gambling markets? You already made some comments. Anything further?
I think that there's kind of separate routes here from as of July and October. You've got the German and Dutch markets effectively going down slightly different roads, and the Dutch market is a relatively small but can be a relatively profitable market. And for some operators, it's more key than others. Kindred, Betson, and all we mentioned, and Bet365, let's face it, will all be enjoying themselves in the Dutch market within a relatively short space of time. It will be a profitable market, albeit relatively small. But the German market, and I think as Gavin said there, that the German market will just be a bad market when it comes to profits. You'll have operators that will be in there that will try their best when it comes to sports betting, that will attempt to make money given the tax rates, and will attempt to lobby in favour of getting that changed, and will use every piece of evidence that they can with regard to black markets or channelization rates to try and bolster their arguments. But the key to that argument, of course, is that you have to then start talking about black markets, which effectively nobody sees, obviously, and you don't see the damage that is done in terms of the amount of money that might be going to offshore operators. It'll all be supposition. And it'll only be further down the line that you find out how bad the situation ever was or ever will be. And meanwhile, as Gavin said, when you've got a situation where investors' minds are very much focused on completely the other side of the Atlantic, it'll just be a market which people will generally forget about. They will simply assume that nobody makes money in Germany, and then that would be it. Where that leaves potentially other competitors, smaller operators hoping to try and make a profit in Germany, I think it's hard to say. I certainly wouldn't at the moment suggest that anybody going into the market as of this summer, for instance, is really going to be working on the basis of making a profit for quite a while.
Yeah. Gavin?
Yeah, I'd agree with everything Scott said. The other things I would add on it is that in the German market, you've got so many operators that have so much skin in the game, or they've such big existing businesses there already. They have to stay there and hope that a more viable market evolves over time, because they've got such huge databases, such established brands. And if you get any sort of improvement on the product or the taxation side, you can definitely see it become a more viable market. So people have to stay there and hope and play the long game. I think in the case of Holland, definitely, as I said, it's much more viable market. And I think it's going to be a market that's going to be quite consolidated around a couple of key brands. And Scott's mentioned them already. They're the people with existing market share. And maybe if someone else come in like Holland Casinos with the Playtech product, that will do quite well. But I suppose the only other thing I'd add on Germany in particular is that two of the biggest economies in the EU now, Germany and France, over the last 10 years have come out with pretty unfavorable regimes for online gambling. I think the way investors look at it is that they just hope that they don't become the benchmark for other countries that could regulate, or other countries that do have regulated start to copy some of their either product restrictions or the taxation they've taken, and ignore the channelization arguments, the black market, grey market arguments, as much have been ignored in Germany. I suppose that's the main kind of worry from investors, is that it just sets a precedent that other governments, other countries can potentially follow. So that's really why people are following Germany and Holland now.
Great. I think it was really insightful to hear your thoughts, Gavin and Scott. Thank you very much. So we go to the Q&A part of this webinar. So again, as I mentioned a few times, quick mention again, in case you have any questions, stuff that you just heard from Scott and Gavin, go to the Slido app, point your camera to the Q&A code, go to the Q&A tab on the top of the screen that you then see, and submit your question. And let's have a look at some of the first question here from an anonymous person there. Other regulated markets have survived despite high taxes. Will Germany be any different, or will the turnover tax to be truly crippling? Sort of going into along the lines, Gavin and Scott, you just said. Any other thoughts?
I like, to be honest, I'd love to ask the person that's asked the question, which markets in particular do they mean? You could point out Australia as a market that has very high taxes across product fees, GST, and point of consumption tax. But the one thing I would say about Australia is it has such a high propensity to gamble, and it's become such a consolidated market. Like, that's a high tax regime that has survived and thrived. But I think there's a lot of unique things about that market in terms of the levels of spend across some players in those markets that I don't think will be replicated in European markets. So it's very hard to compare markets to markets without knowing exactly which market someone is talking about. Like France, the market has survived, but it hasn't really thrived, I would say. So there's very few people making money in France. So your definition of survived really is key here. To be honest, there's people operating there, but are they making much money? Maybe a handful of people are, a very small number of people are. So the definition survived is difficult. But yeah, listen, there is examples of high tax markets, but I just think Germany, where you have a market that's been that has taken place for the last 15 years, you have a lot of existing operators there, and you have a number of operators that are going to start playing by the rules, and a number of other operators that probably won't start playing by the rules. I just don't think that high tax environment can work, because what's going to happen is people will get educated through the high tax operator, and then the player will graduate, or they'll transition to the low cost offshore operator, and they'll make all the money. So it's very difficult to answer that question, but I see few examples of where a tax model like Germany has survived, because it really can't work, that turnover tax at that level.
So crippling, yes. Scott, anything to add, or we move to the next question?
Well, just briefly, I do think there's one of the points I think is interesting is the resilience of the gambling consumer, regardless of tax rates. They always, people still gamble, and regardless of tax rates, they don't pay attention to tax rates, arguably. They do pay attention more to restrictions, and I was looking at something about advertising restrictions and how it doesn't seem to harm the business particularly in Italy and Spain, where we've seen those. So I think that it's tough for some of the operators, but the resilience of the consumer and the ability of the consumer to still gamble regardless of restrictions is potentially of note.
Yeah, thank you, Scott. Moving to the next question from the audience here. Good question here. Which big names have already announced that they will not enter the regulated Dutch or German markets? Looking at you here, Scott or Gavin, I don't know.
Yeah, I mean, none. Obviously, nobody's going to say I'm not going to enter a market. I don't, as far as I'm aware, and certainly it would be something of a shocker if somebody came out and said we're not going to enter that market ahead of time, because it would give it's for all various reasons. I don't think any of the names that we've suggested that might be interested in either the German or the Dutch market have indicated they won't attempt to enter the market. They'll do so under duress potentially, or certainly with a hint of protest. But any operator would obviously open themselves only up to questions about if they didn't enter the Dutch or German market, what are they doing with the Dutch and German customers? So I think that's a tricky question that nobody would particularly want to answer.
No, exactly.
Yeah,
Let's
the only thing
see
I'd add
again
on
in a
that
year
is,
when we do another webinar.
yeah, I just add on that one
Gavin,
thing is
go
that
ahead.
like operators won't tell you. What they'll do is they'll just de-emphasize the market. They'll still operate there, but they'll have an existing database. They'll play that down. They won't market heavily, as opposed to shutting down the market in total. They'll just de-emphasize the market, and it won't be a core focus for them.
Yeah, no, thank you. We'll look at this question again in a year from now and see what has happened there. Next question from the audience here. Do you know anything more on the question to the European Commission on the German tax rate? Scott, Gavin? Scott?
No, I mean, I'm afraid we don't. I mean, I've only seen the story on gambling compliance, probably like everyone else, that apparently the Commission has gone back to the Germans with a query about it. We don't know what that query is about. Certainly, I wouldn't, if I was a betting man, as the phrase goes, I wouldn't put any money on the European Commission getting involved in any way. They've as much as often as not, they've stepped away from issues around gambling. So, but we don't know what the query is about, and whether it will actually amount to anything is very much open to question.
Yeah. Great, and let's move to the next question here. Is there a next question? Yes, here. Good question, and I guess I'm looking at you here, Scott. To what extent will it be the affiliates who benefit in the Netherlands and Germany?
Yeah, I'll cover this. I mean, it's been both Catena Media and Better Collective and slightly lower down the rung, Crowd, I beg your pardon, mentioned both the Dutch market and the German market. Catena Media, despite having a stellar quarter due to US growth, said it would do even better if it had excluded Germany. There is a question around whether or not in Germany affiliates will actually be regulated in some way or regulated out of existence. That would be a worry for them. But as it stands, they will. The problem for Catena is it's more casino focused. Better Collective might be in a better position because it's sports betting focused, and those companies that do stay in the market and operate in the German market will still be needing their affiliate business to boost. And arguably, given the other restrictions around in Germany, I think affiliate marketing might be one of the better routes for ensuring that you can get what was the previous grey market and persuade it to at least try the regulated market or the regulated state. In the Netherlands, a crowd was very keen in its first quarter to suggest that it will be there in the market in October and hope to do very well.
Yeah, thank you, Scott. Let's see if there's another question here before we slowly wrap up the webinar. Yeah, I guess this is slightly off topic, but still interesting from an investor's perspective. What can you say about the value potential of Holland Casino and Netherlands Lottery NLO, which may be privatized in the future? Not sure if you have any thoughts on that, Gavin and Scott.
Yeah, I won't kind of go into company specifics in either case. But what I would say is that I think if you're going to value either company, it all comes down to what sort of market share they can gain from the regulated market over time. So it's very early days to answer that question now. But anytime you've seen a state, semi-state, or a state body involved in gambling, a monopoly operator like that, like if you look at Française des Jeux in France, like a key part of the valuation is how the future valuation is how they could perform in online and what sort of market share they can get. So I think we'll have a better chance to answer that in a year's time around either company. But what I would say on Holland Casinos is definitely they've got a good market share. They've got a number of land-based facilities, monopoly around land-based gambling in Holland, and they've got a very good partner in Playtech, who have proven to be successful in a lot of regulating markets. So I think Holland Casinos are in a good position to take a meaningful share in the regulating Dutch market over time. And that will have positive read-through for their valuation in the future. But you guys will be a bigger expert on me on whether the privatization of either company is imminent or is anywhere in the near future, to be honest.
Yeah, no real certainty on that now. Let's see, so we're 32 minutes past the hour. I'm not sure if there's any more audience questions. Oh yes, here, the cooling off, even upvoted 3 times. Could you say more about, that's more you, Scott, maybe, or Gavin, could you say more about the Dutch cooling off period will impact operators currently in the waiting room cooling off compared to other market entrants?
Yeah, I think
Scott, maybe Gavin.
Yeah, I think that it's hard to say. I mean, we haven't actually faced this problem in any other market. No other market has employed a kind of a cooling off period, as far as I'm aware. But you could make a case that it might harm you. You're not going to be getting straight from the off. But the fact is that the brands that have got the cooling off period have got it because they were previously active in the market and have previous active, certainly have an active player base, and people will know the names. So it can't be that hard, I would imagine, even if you're 6 months delayed, for instance, maybe in the case of, I don't know, Betsson or Kindred. It won't be impossible for them to go into the market after 6 months with quite a splash and say, now here we are, now we're back, and reactivate what would be a reasonably leading market share. I'd be very surprised if it harms them for any length of time. I mean, I'm sure it'll be annoying just for their marketing department, but there are ways around these things, and I'm sure they will be taking advantage as and when they can.
Yeah, thank you, Scott. Anything to add, Gavin?
No. The only thing I would say is that, like, being shut out of a market for 6 months, it's a hindrance, it's a disruption, but it's not a massive game changer. They will come back. They'll come back more powerful, you think, in 6 months' time, given their existing databases. It's just not welcome. It's not great, and it's an advantage for other operators. But I think they'll be fine in the long term. Yeah,
great. Guys, I think we should leave it at this. I think there was a handful of questions that was really, really good. We're slightly running out of time. Let's wrap this up. Thank you, Scott. Thank you, Gavin, for joining us today. sharing your thoughts with us, and hope to see you soon in person, maybe in Amsterdam. With this, we've come to the end of the
Thanks, Willem.
joint Gaming in Germany and Gaming in Holland webinar. I hope you found it useful. In the newsletter that will appear in the next few days, you will get a link to a full recording of the webinar with some interesting summary news there. We'll also share a link to Scott's email newsletter, Earnings and More. I'm a big fan, and I'm sure you'll like it as well. Last but not least, Gaming in Holland and Gaming in Germany, we're also back to business. So we are presently planning our Amsterdam event for the 28th of September. That's 3 days before market opening. And that's already announced and live on the website. And we will, in the next 10 days, hopefully, announce the Gaming in Germany conference event again for the Grand Hyatt in Berlin for the end of October. Bear with us for the exact dates, but we will let the events go back. As always, let's keep in touch. If you have not signed up for the free newsletters and our print magazines, please do so at the URL that you see in front of your screen, here in front of you on your screen, gamingin.eu. That's gamingin.eu. Let's stay in touch, and we hope to see you again soon. Thank you.